Okay, I'm reading the Truth in Lending Act, Subpart E, which is stands for Special Rules for Certain Home Mortgage Transactions. Reading it out of the Code of Federal Regulations, and I'm starting with 1026.41, Periodic Statements for Residential Mortgage Loans. In general, the scope section reads that this section applies to a closed-end consumer credit transaction secured by a dwelling unless an exemption in paragraph E of this section applies. A closed-end consumer credit transaction secured by a dwelling is referred to as a mortgage loan for purposes of this section. Number 2, periodic statements. A servicer of a transaction subject to this section shall provide the consumer for each billing cycle a periodic statement meeting the requirements of paragraph B, C, and D of this section. If a mortgage loan has a billing cycle shorter than a period of 31 days, for example, a biweekly billing cycle, a periodic statement covering an entire month may be used. For purposes of this section, servicer includes the creditor, assignee, or servicer as applicable. A creditor or assignee that does not currently own the mortgage loan or the mortgage servicing rights is not subject to the requirement in this section to provide a periodic statement. Timing of the periodic statement. A periodic statement must be delivered or placed in the mail within a reasonably prompt time after the payment due date or the end of any courtesy period provided for the previous billing cycle. Periodic statements sentence number 2, section C, form of the periodic statement. A servicer must make the disclosures required by this section clearly and conspicuously in writing, or electronically if the consumer agrees, and in a form that the consumer can keep. Sample forms for periodic statements are provided in Appendix H30. Proper use of these forms complies with the requirements of this paragraph C and the layout requirements in paragraph D of this section. Paragraph D, content and layout of the periodic statement. The periodic statement required by this section shall include 1. The amount due, grouped together in close proximity to each other and located at the top of the first page of the payment. Roman numeral 1, the payment due date. Roman numeral 2, the amount of any late payment fee and the date on which that fee will be imposed if payment has not been received. And 3, the amount due shown more prominently than other disclosures on the page, and if the transaction has multiple payment options, the amount due under each of the payment options. Number 2, the content of the periodic disclosure involves an explanation of amount due. The following items grouped together in close proximity to each other and located on the first page of the statement. 1. Roman numeral 1, the monthly payment amount, including a breakdown showing how much, if any, will be applied to principal, interest, and escrow, and if a mortgage loan has multiple payment options, a breakdown of each of the payment options, along with information and whether the principal balance will increase, decrease, or stay the same for each option listed. Numeral 2, the total sum of any fees or charges imposed since the last statement, and Roman numeral 3, any payment amount past due. Number 3, under content of periodic statements, past payment breakdown. The following items grouped together in close proximity to each other and location on the first page of the statement. Roman numeral 1, the total of all payments received since the last statement, including a breakdown showing the amount, if any, that was applied to principal, interest, escrow fees, and charges, and the amount, if any, sent to any suspense or unapplied funds account. And Roman numeral 2, the total of all payments received since the beginning of the current calendar year, including a breakdown of that total showing the amount, if any, that was applied to principal, interest, escrow fees, and charges, and the amount, if any, currently held in any suspense or unapplied funds account. Number 4, transaction activity. If all of the transaction activity that occurred since the last statement, a list of that transaction activity. For purposes of this paragraph, D4, transaction activity means any activity that causes a credit or debit to the amount currently due. This list must include the date of the transaction, a brief description of the transaction, and the amount of the transaction for each activity on the list. Number 5, partial payment information. If a statement reflects a partial payment that was placed in a suspense or unapplied funds account, information explaining what must be done for the funds to be applied. The information must be on the front page of the statement, or alternatively, may be included on a separate page enclosed with the periodic statement or in a separate letter. Number 6, content of the periodic statements is contact information, a toll-free telephone number, if applicable, an electronic mailing address that may be used by the consumer to obtain information about the consumer's account located on the front page of the statement. Number 7, content within the periodic statement is account information. The following information, that's Roman numeral 1, the amount of the outstanding principal balance, Roman numeral 2, the current interest rate in effect for the mortgage loan, Roman numeral 3, the date after which the interest rate may next change, Roman numeral 4, the existence of any prepayment penalty as defined in 1026.32 B6I that may be changed, Roman numeral 5, the website to access either the Bureau list or the HUD list of homeownership counselors and counseling organizations, and the HUD toll-free telephone number to access contact information for homeownership counselors or counseling organizations. And 8, delinquency information should be contained in the periodic statement. If the consumer is more than 45 days delinquent, the following items grouped together in close proximity to each other and located on the first page of the statement, or alternatively on a separate page enclosed with the periodic statement or in a separate letter, include 1, the date on which the consumer became delinquent, 2, a notification of possible risks such as foreclosure and expenses that may be incurred if the delinquency is not cured, 3, an account history showing for the previous 6 months or period since the last time the account was current, whichever is shorter, the amount remaining past due from each billing cycle, or if any such payment was fully paid, the date on which it was created as fully paid. Numeral 4, a notice indicating any loss mitigation program to which the consumer has agreed if applicable, or non-judicial foreclosure process if applicable, the total payment amount needed to bring the account current, and lastly, a reference to the homeownership counselor information disclosed earlier in this section. Letter E exemptions are reverse mortgages, number 1, timeshare plans, and coupon books. Reverse mortgage transactions as defined by 1026.33a are exempt from the requirements of this section. Transactions secured by consumers' interest in timeshare plans as defined are exempt from the requirements of this section. The requirements of paragraph A of this section do not apply to fixed-rate loans if the servicer provides the consumer with a coupon book that includes on each coupon the information listed in paragraph D1 of this section. Roman numeral 2, again, regarding coupon books, shall provide the consumer with a coupon book that includes anywhere in the coupon book the account information listed in paragraph D7 of the section and the contact information for the servicer listed in paragraph D6 of this section, and information on how the consumer can obtain the information listed in paragraph E3, Roman numeral 3 of this section, which I believe I'm reading right now, maybe not, makes available upon request to the consumer by telephone, in writing, in person, or electronically. If the consumer consents, the information listed in D2 through 5 of this section and provides the consumer with information listed in paragraph D2 through listed in paragraph D8 of the section in writing for any billing cycle during which the consumer is more than 45 days delinquent. Number 4, small servicers exemption. Creditor, assignee, or servicer is exempt from the requirements of this section for mortgage loan serviced by a small servicer. Small servicer defined as services together with any affiliates 5,000 or less mortgage loans, for all of which the servicer or an affiliate is a creditor or assignee. Is a housing finance agency or is a nonprofit agency that services 5,000 or fewer mortgage loans, including any mortgage loans serviced on behalf of associated nonprofit entities, for all of which the servicer or an associated nonprofit entity is the creditor. For purposes of this paragraph, E42C, the following definitions apply. 1. The term nonprofit entity means an entity having a tax exemption ruling or determination letter from the Internal Revenue Service under Section 501c3 of the Internal Revenue Code of 1986. 2. The term associated nonprofit entities means nonprofit entities that by agreement operate using a common name, trademark, or service mark to further and support a common charitable mission or purpose. Roman numeral 3, small servicer determination. In determining whether a servicer satisfies paragraph E42A of the section, the servicer is evaluated based on the mortgage loan serviced by the servicer and any affiliates as of January 1 and for the remainder of the calendar year. In determining whether the servicer satisfies paragraph of this section, the servicer is evaluated based on the mortgage loans serviced by the servicer as of January 1 and for the remainder of the calendar year. A servicer that ceases to qualify as a small servicer will have 6 months from the time it ceases to qualify or until the next January 1, whichever is later, to comply with the requirements from which the servicer is no longer exempt as a small servicer. The following mortgage loans are not considered in determining whether a servicer qualifies as a small servicer. Those include A. Mortgage loans voluntarily serviced by the servicer for a creditor or assignee that is not an affiliate of the servicer and for which the servicer does not receive any compensation or fees. B. Reverse mortgage transactions. C. Mortgage loans are secured by consumers' interest in timeshare plans. And lastly, number 5, consumers in bankruptcy. A servicer is exempt from the requirements of this section for a mortgage loan while the consumer is a debtor in bankruptcy under Title 11 of the U.S. Code.